Well, so when we speak about, Bitcoin and some of its features and things like that, I really wanted to put some slides together on cybersecurity, which is our third topic today. The main headline that came out today was from Kraken. They've identified a North Korean hacker who tried to get a job at Kraken. And I'm going to go through a few different components of all of this.
Let me chime in there.
Yeah.
One of our best friends, Marty Bent, runs the TFTC podcast. It was we were in New York for Bitcoin Week. All our friends were in PubKey celebrating at the end of the day. Told him this. They're trying, like the nation state hackers are trying to embed themselves into our companies, our organizations, our custodians, and yeah, exactly. Like right here, confirmed. Uh,
Yeah, and I think anybody who's worked in tech for the last 10, 15 years also knows this, right? You've had potential spies joining your companies, whether that's large multinationals, think to your Amazon, Microsoft, etc., all the way down to smaller consulting companies, right? So this is not necessarily a new thing, but I think one critical piece of all of this is that you're seeing nation states targeting the cryptocurrency community broadly. And we're going to focus on Bitcoin, but I'm going to get there by going through what happened to Bybit, which is a non-Bitcoin story, but I think is really critical to understand what's actually going on here. So first off, what happened with Bybit, right? So if you understand or if you've heard the Lazarus Group, which is a North Korean hacking group, before they've done several other hacks, all with the goal of stealing crypto from exchanges. So in this situation, it's really hard to actually break protocols. So even as much as we're all pro Bitcoin here within Build, ultimately I'm not going to speak to the crypto security, the protocol security that other chains might have. This is purely a human social engineering situation. So the first piece here is in the top left there, developer one's macOS workstation was compromised. How? Likely through social engineering, getting a, in quotes, friend to convince them to download this Docker container that helps them with apparently predicting stock prices, right? So this is unrelated to your daily work at, let's go with Bybit, but you're doing this on the machine. The secondary piece of all of this is actually how other types of cryptocurrencies work. In this situation, Ethereum, you're able to actually do very complex types of contracts, which is really interesting from a technical developer perspective, but from a safety perspective, it can offer a lot of issues, right? So in this situation, it's really difficult to go and audit every single piece of, in this case, JavaScript that was fetched from an AWS bucket to confirm that it's still showing you exactly what you're expecting. So in this situation, you're seeing nation states, North Korea, come in and say, it's actually easier for me to steal crypto from different exchanges by saying, I'm going to join the company or I'm going to convince somebody to install applications that are maybe outside of the purview of their traditional or their normal IT infrastructure. But what does this all come down to? Ultimately, Lazarus Group only cares about BTC. So all of this stuff that's been happening, you're seeing it across multiple different hacks. They're stealing Ethereum, they're stealing blah blah blah, whatever fart coin. I don't care what they're stealing. Ultimately, though, they're trying to bridge that back into what? Native Bitcoin, because like Matt has said already, you're seeing nation state adoption. So when you're trying to find ways to fund your sovereign, when you're trying to find ways to store your value, maybe make transactions within a non-permissive environment, you're trying to find the type of currency, the type of solution that's going to offer the features let you do that. And you're seeing that right now with, in this situation, again, North Korea going straight to Bitcoin. They didn't even care about hiding where the cryptocurrency was going. There's been a lot of conversation over they could have used different types of mixers, etc. But for some reason, in quotes, they just went straight to Bitcoin and didn't care to even try to hide where it was going, because ultimately it doesn't matter, right? It's North Korea. What are you going to do? You're going to go send your the FBI after a person. It sits in North Korea. It's not going to be easily done or possible, right? So as we talk about these different exchanges and all of these are going to come out with their different security implementations. Are going to talk about how their cryptocurrency has the best or better or some advancement over Bitcoin or over some other type of currency because it has XYZ feature. The thing to remember is the way into these companies is not through the actual protocol, it's actually by social engineering. And one thing that I think to call out here is there's been a lot of talk in Bitcoin communities and adjacent communities about, I'm worried about losing my coins, so I'd rather just buy the ETF. I would rather just buy it on the exchange. They'll keep it safe for me. Well, a common response to that is don't worry, we have insurance. But what does that really mean? So I want to call out here. So Brian Armstrong, CEO of Coinbase, in one of his posts recently, he mentioned that the Bitcoin ETFs, now the second largest commodity ETF in the US behind gold, uh, Coinbase custodies 90% of those assets. So when you really think about all this different choice you have in the ETF ecosystem for Bitcoin ETFs, you're really 90% of the time, you're just buying Bitcoin custodied by Coinbase. And so Coinbase, I'm sure, has a lots of really important and knowledgeable security researchers, but at the end of the day, what happens if something goes wrong with Coinbase? You don't have access to your own keys, right? You can't ensure that it is not being moved. So you have to trust that Coinbase is doing the right things on their side to safeguard your assets. But at the base layer, do they have insurance? Yes, but it does not necessarily cover your Bitcoin. It covers Coinbase from you or from others who might try to sue them for doing, for losing certain assets or for trying to recover some of those funds. And another piece here is MSTRs. Want to throw that up there so we all have the same language. You see a lot of people looking at MSTR as a way to get leverage access to Bitcoin or some type of, it's a price action adjacent to Bitcoin. But ultimately, the insurance does not cover you as a holder of MSTR having access to some underlying amount of Bitcoin. It just covers MSTR's access to that Bitcoin, right? So
Hey,
again,
Cameron,
yep,
even in circumstances where you can file a claim, I'm thinking of FTX claims. My understanding is in most of those circumstances, it's the dollar denominated, it's the dollar value of what you lost at that time. So if
right.
am I reading that right? So you might get your dollars back of whatever. Oh, well, don't worry, sir. Your Bitcoin was worth $25,000 at the time. Here's your $25,000. Oh, well, no, it's worth 4x. Am I reading that
No,
correctly?
that's exactly right. So, and in the case of Coinbase and MSTR, they're also calling out that their insurance might not even cover the entire amount of Bitcoin, dollar denominated, or whichever currency that insurance policy is denominated uh, in full. But you're right. Most insurance policies today, and I just want to shout out Anchor Watch, Rob Hamilton, Becca Amalé. They've got their company also focused on insurance, but they very clearly call out it's dollar denominated, right? So if you think you have $50,000 worth of Bitcoin, you buy an insurance policy on that for 50,000 US dollars. Let's say Bitcoin appreciates, you're actually only covered for the amount that in dollars
Yeah.
that you've covered by insurance. So you do need to be very aware of that, and especially as with Matt's chart a few slides back talking about institutional investors coming into the space as they're looking at their options here. They're saying, oh, well, I see that by going through Coinbase, it's really easy. I just have to click buy and it's there. Uh, it's really important to understand at the base layer not just what's going on with the protocol itself, but also what's going on with these companies themselves, because there's two pieces of the puzzle. There's the actual code, which enforces the rules, and then there's the other half of the coin, which is the people who are actually pushing the buttons to make the decision to move your assets. So I want to throw this slide up here just to kind of set the stage here, which is lending. So we know that using Bitcoin as collateral for lending has become much more popular. You're seeing it in the news continually. Cantor Fitzgerald, right, mentioned they want to do 2 billion US dollars into Bitcoin lending. You're seeing a lot more hullabaloo around Bitcoin bonds, etc. But as I mentioned beforehand, it's not enough just to say, oh, there's some front end that I'm looking at that looks different than everybody else that's providing me loans or allowing me to borrow at a certain rate, maybe lower than I could get elsewhere. Ultimately, the question is, how is my loan collateral secured? And so as of today, I'm not going to go into every single one of these, but this is the snapshot of the market from Galaxy Research 2024 Q4. Obviously, Tether is a massive component of that. Most of these don't even lend US dollars, right? They lend some type of other intermediate coin, whether that's a stable coin or that's some other type of cryptocurrency asset, some type of FX pair. And so as you're going through that, you're realizing, where am I actually custodying my Bitcoin on the base layer? It's probably with a subset of these names here or some other ones, right? So as you're looking at finding a borrowing partner or a lending partner, you need to be really cognizant of the underlying security, not just to say, oh, it's Bitcoin, I'm good, but to actually understand, how are we custodying it? How is it actually secured at the human level as well? And I just want to throw up this chart, this table from Unchained. I thought they did a good job of trying to outline the trade-offs, right? Ultimately, there is trade-offs. There are trade-offs anytime you're using something that's more secure. That often means it's maybe a little bit less easy to use on a day-to-day basis, right? So in your exchange account, so thinking like buying this on Coinbase, obviously very easy to move around. You have 24/7 access to move your Bitcoin in theory, but again, we're seeing it becomes it becomes a high value target for nation states. And then as a holder of Bitcoin, you might be wondering to yourself, how do I ensure that my Bitcoin is not able to move without my permission, right? And so there are other options that we can go into, but ultimately the only options, if you truly care about making sure that your Bitcoin is not going to be moved without your permission, is having at least one of the keys in a quorum, or having one of one, right? Which I don't recommend, but maybe you'll do that. So how might Bitcoin's protocol design encourage these better custody solutions, right? So why is it that something like Ethereum maybe tends to have more of these hacks occur on those chains rather than with Bitcoin, right? And I personally think that comes down to the design of the Bitcoin protocol itself, right? So for comparison with Ethereum, you've got all these really interesting, cool, complex, from a technological standpoint, cool and complex contracts, scripts that you can use, L2s, etc. But when it comes down to storing your value, making sure that value is not able to be stolen from you, I think the design of Bitcoin using Bitcoin script, which is simpler, no ability to call external contracts or resources where you don't have visibility into the actual code that's being run, showing raw transaction details, another component of that Lazarus hack. If you want to go do the deep dive research, it's really difficult actually to see exactly where the final funds are going to end up, because you have to go through all of the contract logic. And again, some of that is called through external resources, right? So there's no way for you to fully verify all of this every single time. Otherwise, it would be a massive undertaking. And then finally, Bitcoin multi-sig is natively on chain. This is something that's a little bit different. You might see other types of cryptocurrencies advertise that they have native on-chain multi-sig if they're a Bitcoin variant or something like that. But Ethereum, it's actually up to the wallet providers. So you have to already trust that the implementation provided to you by a third party implements multi-sig in a way that is safe, secure, risk mitigated, right? But with Bitcoin, we know it's baked into the protocol. So with those three things, as a bare minimum, I do think, from my opinion, again, it favors better solutions, or it pushes implementers into a situation where they're able to actually design custody solutions on top of Bitcoin that prevent things like the Lazarus hack, or prevent things like accidentally signing a transaction and sending it off somewhere that you didn't expect it to go. So that was a really quick dive into some of what's going on right now. But again, none of this is to say that just because a company has built their solution around Bitcoin is necessarily safer. You still need to understand how their human side of the business operates, right? If you're hiring a bunch of North Korean spies, it doesn't matter how safe and secure Bitcoin's protocol is, you're still going to have a really bad time.
And look, the moral of the story here is if you're into Bitcoin, you want number go up technology, but the problem is the more number goes up, the more people are going to want to try to come get it. So you you can't assume whatever you did years ago is going to work in perpetuity. You've got to keep re-examining your own threat model, custody model. That's just part of it if you're gonna self custody. So this is good stuff, Cameron.